Hey everybody, before we get into this video, make sure to subscribe and comment what companies you want me to review in the future. This video is not a stock review, but I do a lot of stock reviews. So if you want to see those, subscribe and comment what companies you want to see. Hello everybody. This is a new kind of portfolio update I will be doing because I found out that I can see when I bought every single share of all of my companies. So I have a spreadsheet here that shows all of it, and we're just going to go through how well me personally I have been doing because I am apparently an amazing investor now. Who would have thought? But I did not know. I had no clue. But anyway, let's get into it. Let me fix that quick. But so, whole portfolio here, I'm going to go through all of it. So I did not buy a single stock other than my mutual fund, which is right here, which actually does not say the date, but I believe I bought it maybe around June or July. But either way, whatever. I'm up almost 10% on it, which is fantastic. That's great for me. I mean, I have a fairly significant sum of it. So, I mean, I would hope that I'm up. But anyway, we're going to go through. So, obviously, my biggest company by a pretty significant margin is Celsius. And most of the reason of that is because I'm down on it. So, you can see the shares that I originally bought, I'm down 17% on. I have been averaging down since then, and actually the last 10 shares of the company I bought, I'm up on, including the last 5 being up almost 10%, which is a fairly good way of just improving the price that you have for a company is just averaging down. Also, I skipped my treasury bill here, the hottest thing in my portfolio with a 2% gain. That was acquired in July. So pretty cool there, 2%, pretty huge. But anyway, so Celsius, I think I've done a pretty fair job of averaging down on that. Obviously, I have a bit of a way to go with the actual company overall, but I think they'll see decent performance. Chewy, I am up a good amount on everything. And you can actually see I have been sort of averaging up on Chewy, I guess you could say, where my cost per share was actually increasing. That is because I just really like the company. And anything around $30 or below $30, I just think is a great price for that company. So I'm up on all of them, including almost 10% on the first batch that I bought, which is cool. Cerence obviously is my big winner with over 150% on everything. You could see I bought 30 shares at 325, another 20 just under 3, and then 20 at 283. Those I'm up almost 200% on, which is awesome. No complaints there. That's just fantastic way of averaging down. So my average price is fairly low. I believe it is just about at $3 a share, which is fantastic. Same thing with Crocs, where I averaged down there and went from 103 to just under 100, and I'm up 10% on the fourth share that I bought. They have a pretty expensive share price here at $100 each, so I don't have too much of Crocs in terms of shares. Another one is Dollar General, where I think I'm breaking even on the company now, but the first 5 shares that I bought at $82 a share, and then I bought one at 78 and 2 more at 75. So I am up, I think, overall, but just you can see the returns here. So yes, I am up, but just slightly. Obviously, Hims, I've also done very, very well on. You could see I bought this less than a month ago. Oh, another thing to take into account is the dates here. Like, I've been slowly accumulating Celsius for the better part of 2 months now. I haven't bought any in a bit, only because it's been flattening out a decent amount. But just another thing to look at. I have only been purchasing stocks in this portfolio. Obviously, I've been trading stocks for a few years now, but in this specific portfolio, I only ever had either bonds or money markets, which you can see that's why I still have a bond. But I only started buying stocks in this specific one 2 months ago. And these are the returns on the companies that I have. So, in my opinion, that is fantastic. That is absolutely phenomenal, which honestly it is. I'm just going to say it. It's fantastic. 60% gain on Hims. The reason I bought 10 shares in one day, it dropped a decent amount in that day, but since then has genuinely only been going up, which is just phenomenal. So you can see cost per share at 21. I don't actually know. Okay, it does not say the actual value of the shares now, but I don't remember. But anyway, Robinhood, again, just another one I bought at an absolutely perfect time. Um, I bought in two batches within a few weeks of each other, and unfortunately, I did not buy more. I really, really wish I did because Robinhood is one of the fastest gainers I have. Same thing with Lululemon, where I only bought two shares. Now, they have a pretty expensive stock price, so I actually have a lot of Lululemon, considering I have almost $800 in it now. So for me, at least, that is a lot. And then, yeah, it went up a ton. PayPal up average just about 13.5%, which is nice. Same thing with Snapchat. I think my average is like 16%, just about. And yeah, that's it for the whole portfolio. One thing I want to point out, this is the returns here of all of my stocks overall. And my average return for starting investing, which I believe the first one I bought was PayPal on October 10th. And I'm up 37% on average, which is insane. So that's all I have. Hope you enjoyed me talking about how good I am for 10 minutes. But yeah, that's it. So thanks for watching, and I'll see everybody next time. Good afternoon, everybody. Today we will be doing one more portfolio update. So I'm going to go through basically everything I have here, go over the gains, go over whatever. And just a couple things I want to go into immediately. I am very comfortably up on Celsius now. You can see the last five batches of shares I bought are now all positive. The only ones that are negative are the first two times I bought the stock, which unfortunately is the most, but I believe this cancels out fairly reasonable. And we can see the total gain here. The sum is positive $40. So I'll take $40 whenever I can get it. Chewy, again, we are up just about 9% on. We're actually up 7.7%. For Celsius, we're up right around 7 to 8%, I think. Probably a little less than that just because this is the average, but the weights here aren't the same. Yeah, that is just the average. Something to think about. So, for example, for Chewy, I'm up probably about 9%. Cerence is still looking very strong, despite the stock price kind of dropping down to, I believe they're at right around 6. I think they're still above $6, but I'm not sure. But again, up well over 100% on all of it. Crocs looks good, right around 10% up. Dollar General, I'm very close to being positive on. I think I'm only down about 1%, maybe a little less. And for a new announcement, basically, I have two new stocks for the past week. I made a video on both of these, and then I just released a full review on Performance Shipping, but I bought Performance Shipping and then Global Mofi AI. I don't know how to say that, but I bought both of those. You can see I'm already down on both of them fairly significantly too. I'm down 12% and 7%. Now, again, both of these companies I bought very little of, and I bought them for the purpose of having very, very small, high risk companies that are financially fairly good. So I really just wanted to have a little bit of exposure in that area and kind of find companies that, in my opinion, at least, were financially solid and have a ton of potential upside. Like, obviously, there are companies like PayPal that I already have that I think has a ton of upside, but the ceiling there is they already are worth, I don't even know the number, 40 or 50 billion, while Performance Shipping is quite literally worth 20 million. I mean, to be fair, I put $50 into it. And Global Mofi, I think, is right around 100 million. So these companies have a huge amount of potential growth that I really like. But yeah, that's about it. Basically, I like them. Robinhood, again, I'm up just under 60% on. Lululemon, I'm up 30% on now. They have seen phenomenal growth. But another thing I'm going to do for the whole portfolio review is go through the charts and just show kind of what I'm seeing and why I enjoy these companies. So one thing with Celsius is they were in a fairly long-term channel over the past 2 or 3 months, and you could see they have fairly significantly broken out of that now. They could just be forming a new one that has a bit of a shallower slope, to be fair there, but it looks like they have broken out of that and could be heading back up to right around the $35 range if I had to guess for short term. Long term, I think they could go significantly higher, but looking at Chewy next, Chewy just recently bounced off of a support zone. You could see, I don't remember when I bought it, to be completely honest. I think it was right at the beginning of November. I totally forgot, I could check. So yeah, Middle of October and then into the past month, I've been acquiring a few more shares, and you can see they have been doing fairly well, bouncing exactly where I said it would and rising all the way up to 35. So this is right when I bought it. I think I bought it. I keep forgetting, it literally tells me. So I bought it October 14th. You can see that is right about here. I just really like the company. I bought more November 4th, right around here, and have been acquiring a few more since then. I just genuinely believe, just based on their long term chart, they are going to go much, much higher, in my own opinion. So I really like the stock. Next one is Cerence. So Cerence, I bought October 10th. And if we go to their chart, you could see where they were October 10th. So I bought right around here, actually just a few days after they went up 40% in one day. I bought right around here, and then I bought a few more down here towards the end of October 18th and the 23rd. So here and then here, and then obviously rode that out, and now we are here. Now, they have been dropping for 3 straight days fairly significantly. I do believe that the value is there and they will be holding. Um, but obviously, with people taking profits, I mean, it was literally above $9 a share after being at 280 just about 2 or 3 weeks ago. So completely understandable that it's dropping now. I still expect it long term to go higher than this. But overall, the value that we're at now, I think, will be holding for at least until the next earnings report and probably for around the next year. I doubt it'll go. Obviously, I really don't think it'll go back below the $4 range or the $5 range. I think it will steady out fairly soon. But right now, we're just in a period of higher volatility. For Crocs, I'm up right around 10% on them. So let's check out the chart. I bought Crocs literally right here. If you check my thing, it should say November 15th or the 14th, and right around the 12th and the 14th is when I bought. So you could see right here. What I did was I saw them approaching this long-term support line that they had, and I literally just bought when they were close to the bottom of it. And that was it. And now I'm up 10% on it. Very, very easy. I'm expecting them to hopefully be able to reach back up towards the 130 range. Obviously, their last earnings report was decent, so I am kind of hoping for them to go higher than that. If they don't, I mean, my average is still fairly low, so not expecting too much. Now, their stock has been kind of in a massive wedge for the past just about 2 or 3 years. So it'll be interesting to see where they go in the next year. They're either going to decline or they're going to get all-time highs, which personally I think we will see all-time highs within 2 years or so with this company. So next up, we have Dollar General. Now, this is a little bit of a controversial one because they have been steadily and significantly declining for a bit now. I'm going into the week time frame just so I can show you how long they've been dropping. So starting right towards the end of the pandemic time frame, I guess you could say, they were dropping significantly right around the end of that after a few earnings reports showing that lowered demand and the lowered guidance. Now, I believe they have found sort of a support range here, which if we zoom out farther, we can see they are at a just about 7-year low from where they used to be. And actually, the first time they hit this price was 9 years ago. And just with how much their intrinsic value has increased in that time, I'm expecting them to be able to very easily recover from this area. I really don't think the company's in trouble at all. I will say they have a significant amount of long-term debt, which I think is a problem and needs to be fixed soon. But overall, I mean, you could even just see on the momentum index right here how low it is and where it was the last time. They went from just about 102 to 160. So even just for a short-term trade, I think we could be seeing some fairly decent things. But yeah, we'll have to see how they do in the future. Overall, I don't have a ton of this company by any means. So no matter what, I do think it's just a solid play. It's definitely undervalued from where it is now. So we'll have to see where they go in the future. Global Mofi, GMM. Now, this, as well as Performance Shipping, I don't want to say are like not serious investments. But again, I put like $50 into this. I'm really just hoping to see some increased growth. So their financials are really, really solid. I'll probably have a full review and analysis of them out in about a week or so, maybe a couple days, but we'll see just when I get to it. Honestly, I have a lot of companies I want to review, but they have been declining significantly, but their reports and news that they've had coming out is really, really solid. I mean, their revenue growth is very significant. So this is just another company that I do honestly believe in, and I think they could see a lot of growth. Just the market isn't recognizing that, and some of their past has been fairly negative. They did a few stock offerings that weren't exactly very smart, at least in my opinion. It seems like they basically did late stock offerings after their IPO to raise money, and now they're kind of starting from scratch at a much lower price. But overall, not too bad. HIMS is another one that has been outperforming massively, up 40% on it, actually over 40% now. So you can see I keep forgetting to look at the date before I go into it. I bought HIMS on the 18th, and I bought it in 2 batches. Um, October 8th. Oh man, I keep it. So sorry, November 18th. So I bought it right here on November 18th as it hit this support line. Based on the recent earnings report, I kind of knew the value would hold just based on how they were looking. So bought the stock. It has basically only gone up. It's a little bit down over the past few days, but again, this is another company where I'm expecting the value to hold. I think they have a ton of growth that they can do, and they've seen massive revenue, margin growth, everything along those lines. So I did a review of them a while ago, but it's not the most in-depth because it was just when I started making videos. But overall, I think we're going to see them performing fairly well. So next up is Robinhood. Robinhood is one of my favorite stocks of all time. It is a company I use their app for a lot of trading. I love the company. I bought it on October 31st, Halloween, I believe. And so I bought 2 shares on the 15th. This was just to start a position. So it was like $50, no big deal. And then I bought 8 more shares on the 31st to kind of solidify my buy. So you could see the ones I bought on the 15th, I was actually down on. And as soon as I saw that, I knew just based on this earnings report, which I thought was fairly decent, that they were going to be taking off, especially with how their crypto revenue has been doing. They have a massive market that they're just recently really breaking into. And I think it's going to be a massive revenue opportunity. So bought a ton right at the bottom right here, only up since then. We are getting close to, we're actually now above their IPO price. It looks like, I think they IPO'd right around $40 or $38. I forget, but they were above it for a little bit. They were above 40. Obviously their all-time high is right around 80. And honestly, I could completely see it happening within a year, possibly within 6 months. I could definitely see it happening. So that is just another thing to be interested in. Next is Lulu, which I bought on October 24th. Now, Lulu, I actually reviewed in my internship that I do for portfolio management, and I just really liked the company. So I think it was October 24th. So I bought it right here. Their stock was fairly low compared to where it used to be. And also, I just loved their financials. They were excellent. They have massive sales growth, and their margins are very solid. So you can see they had a fairly good day, up 15% a couple days ago. I believe that was based on just their earnings report being excellent. You can see they had an increased price target here. But yeah, Lulu is probably going to do fairly well in the next couple years, definitely a couple months. Next is Performance Shipping. So PSHG. So this is, again, a unique case where their stock chart looks terrible. And I am very aware of that. But one thing is I just like the company. Their financials are great. You could see they have broken down some support here. So there is a solid chance that they will be heading down back towards the $1 range. Now, I don't know if this is going to happen. Again, I only put about $50 into it, so there's always the opportunity to average down there, which I most likely will. I don't think I will buy any more shares of this just because of how high risk it is until if it hits 120, maybe 125, I will be considering it. But overall, it's no big deal, at least for me. $50 is not crazy. Really, I'm just interested in the company. I think they have potential. And also, you could lower this to here to where these 2 points are and just say they're hitting the support line, which honestly they kind of are. So overall, I don't think it's anything too concerning. Their financials, at least in my opinion, look fantastic, and they're doing a lot of sales revenue growth. So I'm really not worried there. Almost at the end, we have PayPal here. PayPal I have bought on October 10th. And if we go in, we can see where that is. So I bought it right about here. And you can see they've increased fairly significantly since then. PayPal is one of my favorite companies. I just love them. I think they're excellent. Their financials are excellent. The company itself is good. Obviously, they have stuff like Venmo and just their own PayPal platform. So I do think they're going to see very solid growth. Even like Apple Pay, I really don't think people are using Apple Pay that much. I mean, they just get PayPal on their phone and use that, or Venmo on their phone and use that. So overall, I really like the stock. That's basically all I have to say for that. Snapchat is a bit of a controversial one. A lot of people don't like Snap just as a company or a stock, but honestly, they're right up there with like Facebook and Instagram. Not so much with users, but just with like significance. Like everybody, at least in like high schools, colleges, everybody is on Snapchat. Everybody uses it. Influencers use Snapchat. They are increasing their revenue significantly. And I honestly think they are very, very undervalued. I mean, they have been growing very significantly just everywhere for this entire time. Again, they are fairly undervalued in my opinion. I do think fair value, just based on where their IPO price was, right around $25. I think their fair value is probably 30 or 40 at this point. Just based on where they were then compared to where they are now, I do believe that should be in that range. So that is just something that I believe personally. And then last but not least, I do have a mutual fund, which I'm up 8.7% on. That is my largest holding by far, basically just to balance my portfolio and give me some steady income. And then I do also have a bond here, which I'm up 2% on. I always have bonds in my portfolio, no matter what, but I will probably, once that is done, I believe it is expired, or I should say, I'll get the interest for that in January, and I'll be rolling that over into another one once it is completed. So that's another thing that I personally, at least, always say to people is you should have bonds in your portfolio just as stability, consistent gains, all that kind of stuff. So that's it for the portfolio review. Hope you enjoyed. Hope you learned that my stocks are doing great. I don't know, but yeah, that's about it. Thanks for watching. Make sure to subscribe if you haven't, and see you next time. Hey everybody, we are back once again with another portfolio update video. So today I'm going to be going over how my stocks have performed over the past week. We'll be looking at the spreadsheet once again. I really don't want to do this video weekly because I feel like stock growth takes time. But today I'm adding an extra part to my portfolio where I'm using my Robinhood account to basically buy high dividend paying stocks, and seeing how that strategy goes with reinvestments and dividend growth. So I'm going to be going over that aspect of my portfolio now, and also just reviewing everything else that I already have as well. So anyway, let's get into it. Also, make sure to subscribe. I almost forgot. So starting off with just the overall portfolio update, nothing too crazy to go over. One thing I will say is that Cerence is once again over $8. I am down again on all shares of Dollar General, which kind of sucks, but it's whatever. It's a long-term hold. Another thing, both of the new stocks that I bought, I am currently down on, however, not by too much. 7% on Global Mofi and just under 3 on Performance Shipping. Nothing too crazy there. Another big development, I am over 70% on Robinhood now. They had a great week. Same thing with actually Crocs, I believe today just ended the day up 4%, which is pretty good. Or not Crocs, sorry. Chewy ended the day up 4%, which is pretty solid. Other than that, I think everything else across the board has done pretty well. Hims is up another 4% over the past day, and Robinhood again up 7%. And just making sure on my phone here, Cerence is now up over $8 a share again, which is awesome for me. Buying more than half of my shares under $3. Performance Shipping and Global Mofi actually are both up after hours today, or not even after hours, just up in general, but my Vanguard account won't update until tomorrow. So I may actually be positive, especially on Performance Shipping, which is up at almost 5% today. So overall, that's pretty good. But let's get into the Robinhood stuff that I was talking about and see what's going on. So these are the two dividend funds I bought. So we have YMAG and YMAX. These are essentially both the same thing. However, YMAG is more focused on the Magnificent Seven, hence the MAG, and then YMAX is a slightly more diverse group of companies. So basically, I put $500 into each of these, and I'm going to see how they are performing over the next couple weeks with dividends. Both of these stocks actually pay very, very high dividends. And they also pay out weekly. So that was kind of the attraction for me. And just yesterday, I'll link it here. I made a video explaining these a little bit more and my own dividend income in my portfolio. So if you're interested, make sure to check that out. But both of these are newest additions to my portfolio through the Robinhood account, just so I can kind of track the whole dividend increases and everything a little bit better. But yeah, that's about it today. Hope you enjoyed. I know I did. Stocks are doing great. Really excited for this new dividend income thing that I'm going to try out. And that's about it. Make sure to subscribe if you haven't, and I'll see everybody next time. All right. Hello, everybody. Another portfolio update for today. I know, once again, I said I probably won't do a portfolio update for like a week or two. I lied. I lied. That's all you need to know. Not too many changes here. I am going to start showing some charts of the stocks that I'm in just to give a little bit more information on like what's been going on recently. So, Celsius had a rough week. I'm only up on about 5 of my like 40 shares or however many I have. So, not great. They are the largest holding I have, so it kind of sucks that I'm down, but it is whatever. For Chewy, let's look at Chewy. Chewy had a pretty solid week, up starting right around like 32. We're just under 34 now, so nothing too crazy there. I'm up on everything. Cerence should be pretty shaky, and you know what? You would think it would be pretty shaky. It's not. Oh, don't get me wrong. It is going from a low of like $7 all the way up to almost $9. It is rough, but it is technically up for the week, which I am happy with. Obviously up massively on everything there. Not really too much to say for it. Crocs almost took a pretty big dip, but came back basically entirely for me, and now it is pretty much right where it was at the beginning of the week. I'm up right around 10% on them. DG, the big DG had a flat week, nothing too crazy happening there. Global Mofi is down. Oh, actually, it might not be down. But when did I buy it? The 9th. And the 9th is right here. I am down on it. Yes, definitely. Definitely down on it. 373 cost per share. It's at 332 now. I am down, which is unfortunate. But you know what? For me, it's more of a whatever. And I just realized obviously I'm down on it because there's a negative 10% there. But again, I'm down $4 on it. So no big deal. I may buy 10 more shares. I don't know yet. I want to say I had an order set to buy a few more shares and I may have canceled it, but I don't remember. Um, but yeah, so I am down on those. Just bought it, but still down. Hims had a pretty rough week, starting the week right around 28. We're at 26 now. I am still up very healthily on all of my shares, so no too big deal there. Hood obviously is also down. Hood and Hims tend to move fairly similarly, but overall still down on it. But once again, I'm just making sure this is actually showing a week. Once again, for Hood, I don't really care because zoom out just a little bit and you'll see very, very solid. So don't really care too much. I honestly might, if you look at that 3-month chart, just with how low it dropped there, if it goes back down towards like the 20s, I'm probably going to buy more of it because if you see here, I really don't have that much up Hood. I have a little, maybe just under $400, which I would like more. I would like that to be one of my biggest holdings, and it isn't. So I don't really care about buying more. I totally would. Lulu, again, slightly down for the week. The market as a whole was down for the week, so I'm really not expecting too much out of any of my stocks. PSHG I bought on the 9th, which is not in November. Obviously, this chart is a little shaky, but where is the 9th? What day is today? When did I buy Global Mofi? Oh, never mind. I don't know what I'm saying. But yeah, PSHG actually ended the week up, which is perfectly fine by me. I really don't expect too much for this and Global Mofi when they're such small companies. I mostly am just holding them for the potential that they have. PayPal, again, also ended the week fairly rough, down from right around 90. They were actually over 90 for about 2 days, and now they're at 87. New stock. I did buy SMCI. I am up 2% on it, which is cool. I bought 7 shares at right around 30.95 a share. So, yeah, I totally forgot about this. If you look at their chart, they had that problem with their accounting firm, which caused their stock price to get absolutely annihilated. Since then, they've had a really solid earnings report, and they bounced fairly significantly off of a low. I'm expecting them to find support right around this. It's basically a 50% retracement from where this past high was. Expecting them to find support there and continue upwards, because this company is fantastic. I'm probably going to do another video on them, actually, very soon, just because of how good the company is. And considering I just purchased it, I feel like I should have videos up on all of the companies. I did review them probably over a month ago now, but that was after the whole accounting thing went down. And since then, I feel much better about the company. So I will re-review that very soon. But yes, I did buy Super Micro. Next up is Snapchat. And once again, I know a lot of people do not like Snapchat. I love Snapchat. Snapchat is, in my opinion, now don't get me wrong, I don't use the app as much as I used to, but at the same time, I am not really big on social media in the first place, other than, of course, I am a little hypocritical because I do make YouTube videos, but that's a little different. But anyway, sorry, adjusting the chart there. So you can see they are basically riding the support line, loosely, I should say, a loose support line. And what I'm expecting is for them to probably head up towards $20, mid to short term. I honestly do believe in the actual growth of the company, and I mean, I do think that they, considering they're mostly just running an app, they could expand into almost anything else and probably make a lot more money from it. I really think the company should expand into other things, but I don't know if or when they will. But anyway, I am expecting to get probably up to the 16, right around the $16 range fairly soon. I don't think I'll sell it then, but honestly, considering I bought under $11, if it does end up getting to 16 and I'm up 50% on this company, it would be really tough to not sell it, only because here's the thing though. I'm going to talk about Snapchat for a moment now. If they break this resistance that they have here, right around $17 to $18, their stock price could head right back up to 50, 60, 70, right where it used to be. At the very least, finding this first spot of like resistance right around here between 30 and 40, it could head right back up to there. Since this has happened, the company has been increasing its revenues, increasing its profitability, so it could absolutely happen. So definitely something to watch out for. I mean, Snapchat's one of the most popular social media platforms in the world. Would not It wouldn't shock me to see them back above $30 within a year. Would not shock me. And then finally, last but not least, my mutual fund. I actually don't know if this is tracked, and it looks like it isn't. But oh my god, I can't spell. Vanguard. I don't even know what to do for it, but high dividend yield ETF would probably be similar to it. I mean, but yeah, this is a dividend appreciation ETF, or sorry, mutual fund, I should say, and up 6.66%. So that's all. That's all for that one. Also, my bond is up over 2% now, which is cool. I performed better on this bond than I have with Celsius, so that's just something I have to live with in my life. But anyways, that's all I have for this part. I just wanted to incorporate the charts into this video. But now let's get into that dividend project that I was talking about last time with my Robinhood account. So let's see that. All right, so little update on the two high dividend ETFs I bought. So I am down on both of them, just about $36 overall. But I would like to talk about the dividends that have not been reinvested yet, but that I don't believe that is taken into the total return. I believe they're separate. But let's take a look at the dividends. So first of all, this is the
stock over the week. So yes, it was down. However, as we can see when I figure out where to scroll, dividend of a buck 48. This was in 1 week. Now, to be fair, the reason I am down on both of them is because the entire market tanked. But still, in 1 week, dividend of $1.48, which is crazy. Also, another thing which I realized is, if you look, this is the Yield Max Magnificent Seven fund. So they have funds for different stocks, Magnificent Seven companies. So pretty neat to see that. But anyway, the other one, which is a little more surprising to me. So obviously, I was up the day I received the dividend, but overall, same exact performance. A little bit less down on this one, I think, just instead of the Mag 7. But this one incorporates every single income strategy ETF they have. Literally all of them, many, many different companies. And here's the crazy thing, 389 for 1 week from 500 bucks, which if you know dividends, that is insane. Now, to be fair, again, dividends are directly taken out of the share price, but at the same time, the share price the day of the dividend was up. It was up. So, like, I don't even know what to think. And if you look at the long term returns of this, you would think with these kind of dividends, it would be like way, way down, but it's not. It is down 11% in, to be fair, it is down 11% in 1 year, which is not bad at all, just considering. And I mean, it does follow the market fairly closely. If we want to look at the other one, we could see where they are at in the past 1 year. So they're actually almost positive. And considering the dividends, they're probably up 60, 70% with dividends, which is crazy to think about in 1 year. And those kind of returns are just crazy. So I am going to make a separate video on this, and just analyze like what's going on, what's happening, what kind of returns I'm getting on it just overall. But that'll probably be another day. But yeah, that's it for the update. I think they will perform very well in the future, once the market kind of picks back up from where it was. I did not have dividend and reinvestment turned on, which is why I still have exactly 25 shares of this one specifically. If we go look at both, I don't have dividend reinvestment turned on. I just forgot. I just enabled it today. But in the future, I did reinvest the exact amounts of the dividends into them. So it'll probably go in on Monday. But in the future, I just have dividend reinvestment turned on now. So we'll see how many shares I have within the next like 2 or 3 months. And probably within the next year, I'll have like 5 to 10 more shares of each of these basically for free, which is pretty cool. Now, again, you have to think about like the net asset value decline and everything, and how the stock price will drop when there are dividends paid. But all in all, based on how these have been performing so far, just based on the charts and how I've actually seen them, it looks promising. So that is all I have for today. Hope you enjoyed. Again, portfolio is doing fairly well. I'm enjoying everything. So that's it. Make sure to subscribe if you haven't. I'll see everybody next time. Hey, everybody, what's up? We are back with another portfolio update review update. So, first off, I want to give a big shout out to my good friend Dumpster Dive Trades, who just started making videos. Make sure to go check out his channel. He focuses on technical analysis and basically reversal trading undervalued stocks. Make sure to check him out. He makes great videos. But anyway, on to the portfolio. I bought a couple more stocks I want to talk about. I reviewed them already, but we'll get into it. I updated my bonds in my portfolio, and I want to talk about the dividend stocks that I have on my Robinhood account that ended up doing surprisingly well. So make sure to subscribe if you haven't. And yeah, let's get into it. So, first thing I want to do here is go over the new companies I bought. And I also just very recently discovered the TradingView watch list, which is probably the coolest thing that I have recently discovered. So, what we're going to do is go into the last month and look at the performance of all my stuff here. As you can see, most things are up. Well, I mean, some things are kind of up, I should say. Let's go into the 3 month. That makes everything look a little bit better. As you can see on the 3 month, everything is wonderful and beautiful. We're just going to get rid of the benchmarks here, make it a little bit easier to see maybe. Everything is wonderful and beautiful. I had no idea that this visual was even a thing, but just so everyone is aware, I bought most of my stocks in October and November. and obviously since then they've done fairly well. Um, so yeah, that's about it for the stocks. Also, new companies I bought. I did purchase Super Microcomputer recently. I purchased Fastly, which I just reviewed, and I purchased New Holdings, which I'll have a review on tomorrow. All three of these, I believe, are fairly solid with the whole undervalued stock that can see a lot of growth. Don't mind me as I click through here. I just want to show the charts a little bit easier. So overall, in the past 3 months, Supermicro, obviously, I think a lot of people know, has been getting destroyed recently. Had a very significant comeback and is now looking like it is in retracement range to be going back up to where its stock price possibly used to be. So overall, I think it has a very strong short-term outlook. I could easily see it going much higher than it currently is. New Holdings looks insane. I could probably show the past year. Here's the past year for all of these companies. So New and Supermicro have both done okay over the past year, but overall, I believe that they will be continuing to outperform. And then Fastly is more on the technical side, where I'm looking at the stock as just being in a good buy situation. Um, all three of these, in my opinion, have excellent financials, and their stock prices are at really solid places where they can definitely see a lot of growth in the near future. But other than that, let's get into the whole dividend side of this. So I made a spreadsheet to go over it, and basically, we are looking at both ETFs that I bought. So I have the number of shares, the share price, the total equity, the dividend, and then how much was reinvested. So overall for YMAG, I got a $1.48 dividend. This is in 1 week, just to be clear. So almost a tenth of a share, just under a tenth of a share in 1 week from one dividend, which is pretty solid. And then we go into Y Max. I got just under a quarter of a share, 389 dividend. So what this means is, although my total equity did go down because of the mostly because of the overall market decreasing, my total shares increased by 0.3. I got a $5.37 total dividend, and my yield in that 1 week from the dividends is 0.5%. So although the share prices did go down, I did yield 0.5% just from dividends in 1 week, which means roughly, if it stays this way relatively on average, that would be 2 to 3% a month just from dividends, which is really, really good. That's like 30% or more per year, which is insane. I'm very impressed by this. I think it could be really, really good. And also, for anybody that actually happens to watch, let me know if you want to see this format for the stocks in the future. I think it could really help to show like how my stocks are doing. I mean, I'm probably going to continue doing this um, for the future just because of how much easier it is. So, yeah, I think that's about it. Make sure to subscribe if you haven't, and I will see everybody in the next video. Thanks for watching.